This is the Mag 7 Intel brief for February 5, 2026. Today, the market is grappling with a radical divergence in the artificial intelligence trade. While the flight to safety defined the start of the year, we have officially hit a reality wall regarding capital intensity. On one side, we have Alphabet, which recently touched a $4 trillion valuation as its 48% surge in cloud revenue justifies an unprecedented spending spree. On the other, Microsoft has seen $357 billion in market cap evaporated in a single session as investors fixate on a monetization gap, the growing distance between record-breaking quarterly CapEx and tempered revenue guidance for Azure. The era of rewarding broad AI potential is over. The market is now strictly grading based on execution. The primary market-moving headline today is Alphabet's massive reset of the infrastructure benchmark. Management has guided 2026 capital expenditure to a range of $175 billion to $185 billion, nearly doubling the $91.4 billion spent in 2025 and shattering the consensus estimate of $119.5 billion. This is not isolated. Meta has confirmed its own record budget of $115 billion to $135 billion to fund its superintelligence unit, while the collective spend from the 6 hyperscalers is now projected to exceed $500 billion this year alone. We are tracking a $240 billion cloud backlog at Alphabet and a $625 billion backlog at Microsoft. The intensity is non-negotiable. Roughly 60% of this capital is flowing directly into technical infrastructure, primarily GPU and custom TPU clusters, with the remaining 40% tied to data center real estate and power. Looking toward 2030, we are moving from the software-centric AI phase into what we term infrastructure hegemony and physical AI. Tesla's strategic pivot this week, discontinuing the Model S and X to repurpose the Fremont facility for Optimus humanoid robots, is the burn the ships moment for the sector. 14, 15, 16. The next 5 years will be defined by strategic scarcity. The leaders are no longer just fighting for chips. They are cornering the global supply of land and gigawatt-scale power. As Alphabet secures partnerships to power Apple's Siri and provides silicon to Anthropic, it is evolving into a sovereign-scale platform provider. For those who cannot match the $50 billion per gigawatt cost of entry, the reality wall will likely result in permanent marginalization. Based on current institutional sentiment, which remains strongly bullish with a positive delta imbalance of over 162,000 for Alphabet, we are reiterating our tactical trade recommendation. The play is a bull call calendar spread on GOOGL. We are selling the near-term February 2026 calls at the $340 strike, while simultaneously buying the June 2026 $340 calls. This allows investors to harvest the current high implied volatility following the earnings bombshell, while maintaining long exposure to the June expiration, where institutional volume is heavily concentrated for a target price move toward the $370 to $380 range. The AI trade has become a war of attrition. For daily institutional-grade analysis on the Mag 7 and the evolving infrastructure landscape, subscribe to Mag 7 Intel. Stay disciplined and watch the CapEx. See you at the opening bell.